Morning, everyone. Welcome to our regular daily session, Daily Market Outlook prepared by Windsor Brokers. Today is Wednesday, 5th of September 2012, one day before the ECB meeting that is now the main focus, with most of markets seen in a sort of defensive mode ahead of tomorrow's meeting, with Euro pulling further low on the weakness part yesterday after a failure to clear levels above 126, 126.36 basically was the high, and dipping as low as 125.20, 125.15. I think it was the low of the late Asian session, earlier European session, pardon. Being in the defensive mode so far, with sterling also in a similar movements. Well, also the dollar yen is slightly lower on its recent corrective action, as 78.60 hour trigger for further extension higher stays intact for now, and the pair slid down to 78.30 zone. We see it as quite good support, and the ability to hold above this level would keep it in a near-term positive tone for possible attack on key barriers at 78.80 and 79.00. Also, dollar Swiss is sticking higher after yesterday's move through breakpoint at 95.50.60, now testing 96.00. The commodities are also in defensive as crude oil dips down towards 95 level following upside rejection at 97.35 yesterday, all awaiting the decision of the ECB of possible further bond buying. As the meeting is approached, the pressure on the European Central Bank raises as France and Italy put more pressure on the ECB to agree steps this week to reduce the crippling borrowing costs for southern Eurozone states. But the bank is expected to outline rather than detail its strategy on tomorrow's meeting in order to keep the pressure on politicians to bring their deficits and debts under control. Italian Prime Minister Monti and the French President François Hollande said after talks in Rome that institutions must act to bring down the bond yields of countries that are unjustifiably penalized by markets. Monti also said he expected the measures to remove the serious obstacle of spreads that have no underlying economic justification for Italy and the other countries, as they are doing their homework on economic reform and the deficit reduction. The Bank of Italy said in a study that economic fundamentals justified a risk premium of 200 basis points or 2 percentage points over benchmark German bonds, rather than the 450 basis points that markets were charging at end of August. French President Hollande said high debt yields facing countries such as Spain and Italy were not justified, and it was the role of the EU institutions, including the ECB, to bring them down. From the other side, the ECB President Mario Draghi will try to back up his pledge to do whatever it takes, what he announced in the one of the previous meetings, to save the euro when he presents some details on tomorrow's meeting of a new bond buying plan that is transfixing markets. Hopefully it can ease the Eurozone crisis. Investors are on tenterhooks after brinkmanship in the ECB internal negotiations over the plan was played out in public last week, with one newspaper reporting that Bundesbank chief Jens Wiedmann even considered quitting. Now the ECB is being forced to take a greater role in fighting the debt crisis, while governments negotiate legal and political hurdles to coordinating a longer-term response. But Germany's Bundesbank wants to limit the scope of ECB action. Of course, the main focus now remains on the ECB, but we're going to look for today's events and see what we are expecting today ahead of course, tomorrow's trading day, that we might face some more action in the markets. Today's calendar starts with the Swiss CPI for August. It's been already released. We don't have yet our calendar updated, but we're gonna see that monthly release came out unchanged at 0% versus the forecast of 0.10%, and the July's minus 0.5%. A series of services PMIs from Europe start at 753 in Germany. August release is now forecast 48.3%. 48.3 was the previous release, followed by European services PMI for August at 8 o'clock GMT. No change from previous release, 47.5. UK's one comes half an hour later at 8:28. 51.5 is forecast compared to 51 release of month of July, along with the manufacturing PMI released yesterday, also coming much better than expected, showing some improvements in the UK, while the Eurozone countries are still stagnating. At 9 o'clock GMT's retail sales of Eurozone for July monthly release is forecasted to dip by 0.2% compared to increase by 0.2% in the month of June. And across the ocean, 12:30 GMT, US revised non-farm productivity for second quarter of the year is forecasted slightly higher, 1.8% compared to first quarter's 1.6%. And finally, Bank of Canada is due to release their rate decision, while expected is unchanged rate at 1%, with the rate statement to follow after the announcement, and both are due at 1300 GMT, and that was from today's fundamentals and economic events that are due to be released. We're going to take a look now in the technicals and see the latest movements in the major currencies and commodities. As said at the beginning, euro is in defensive mode following yesterday's repeated failure, just under 126.36. 126.26 was yesterday's high, and then a loss of important support at 125.60 triggered further weakness down to 125.15, just ahead of 125.00 round figure support, and more significant higher lows 124.86 along with the 38.2% retracement, and the previous range floor at 124.64 seen as a key support in the near-term action. 124.64 low of 28th of August 2012, break of which is to more significantly weaken the structure. However, larger picture is still maintaining a positive tone despite studies started to move sideways or slightly pointing lower on its 1 month rally from 24th of July low at 120.42. That peaked so far at 126.36 with the still positive tone, seeing more potential for further extension higher as long as important support at 124.60, 124.40 stay intact. Basically, ideally, any reversal above 124.60 would be seen as an opportunity for leaving lower top and possible extension higher. Immediate dynamic support is at 125 as also round figure support. This is also 90-day moving average. The tomorrow's action of ECB will give us more clues and more direction, as the single currency remains now congested within 126 and 125 range. Of course, the near-term tone is still turned more towards the downside, as weak hourly studies see more potential towards the downside rather than upside. On the upside, 125.60, 125.80 zone offers initial resistance, and basically break above this level, where is also bearish crossover of 20 over 55 days exponential moving averages would provide the near-term relief and avert immediate downside risk for possible and possibly turning focus towards the upside. Again, for now, near term, the downside remains favored. Initial support 125, initial target on the downside 125.00, and more significant 124.86 and 124.64. Also, sterling near-term action is in defensive mode as repeated attempt at 159.11 failed yesterday at 159.08, and a quick reversal dipped so far to 158.46, testing the initial 158.50 support. Failure to basically break, below this level that also marks near 50%, near 38.2% retracement of the latest upleg from 157.69 to 158.59.08 would further weaken the near-term structure as the 20 days exponential moving average is now crossing below 55 days one, and all indicators are in the negative territory, keeping the downside favored for now, with immediate supports at 158.39, 50% retracement, and 158.22, 61.8% retracement. This is also reinforced by 55 days exponential moving average on the 4-hour chart, and ideally any further dips should be contained somewhere above 158 in order to keep the pair in the current sideways, I would say rather sideways mode, as the upside tough barrier at just above 159.00 still stays intact, while loss of significant supports at 157.69 and the key support at 157.50 would be signal for further extension lower, and would be basically signal of double top formation that will allow for a deeper reversal. Conversely, reversal above 158.20 trendline support and 158.00 round figure support would keep the near-term bullish tone intact for a possible fresh attack higher, as break above 159.11 is to open a fresh phase higher of the larger uptrend, and focus 160.00 as next barrier and the psychological resistance. As we said at the beginning, the dollar yen lost some of its traction on its near-term recovery from 78.20 zone, as approach to initial barrier at 78.60 stalled at 78.53, where gains were capped by descending 55 days moving average on the 4-hour chart, also marking 23.6% Fibonacci retracement of the latest down move from 79.65 to 78.17. Failure to clear this initial barrier would keep the negative sentiment that persists in the larger time frames in play, while on the hourly chart, loss of momentum, and as other studies started to point lower, see immediate risk of test of 78.34, which is the trendline support, and another significant 78.27, 78.20, loss of which would be quite risky for a possible extension down towards important 78.00 base, as this move is seen as corrective part of a larger down move, and not much potential seen at this point, according to lower and higher time frame studies that are still maintaining a negative tone, even though even the hourlies that turned positive in the past couple of days on rally from 78.20 are now losing traction, loss of momentum, and studies started to point lower, see more risk towards the downside. Just to repeat again, holding above 78.30, any reversal above this level would keep hopes of possible further extension higher, with clearance of immediate 78.55, 78.60 barriers required to open a more significant resistance zone at 78.80, where it's that marks a top of the recent range, and also close to 50% retracement of the down move from 79.65 to 78.17. with the break above another important 79 zone that is round figure resistance and approximately 61.8% Fibonacci retracement required to turn the focus higher. Otherwise, lower top and fresh extension towards initially 78.2015 and then 78.00 would be quite a likely scenario in the near term for dollar yen. And the dollar Swiss continues to benefit recent strength as attempt to leave the double bottom at 95 zone is now materializing after breaking above initial barrier at 95.60, extending so far to 90, close to 96.00, and just ahead of our initial strong barrier at 96.1015, near-term double top posted on 30th and 31st of August. It's better seen on the 4-hour chart. Break above 55 days exponential moving average at 95.83 now gives more potential for recovery, but it's a must to regain minimum 96.15. That also marks 38.2% retracement in order to signal double bottom formation and look for test of another important 96.34 barrier, above which to confirm the near-term base and allow for stronger retracement of the down move from 97, 96, 16th of August peak down to 95.00, 31st of August low. Just to repeat, any failure under 96.15, 34 sees risk of lower top and further extension lower as the pair remains in the negative trend in the downtrend of 99.70, 24th of July peak. With the 95.00, 50% retracement of larger 90.41 to 99.70 ascent seen so far, now offering good support with the attempt to base at this point still evident. Break above, as said, 96.15, 96.34, and then 96 around 50, where is the trend line resistance required to avert immediate downside risk and open way for stronger reversal. Conversely, failure to do so and the formation of lower top and fresh extension lower will bring risk again towards the 95 zone as initial and strong support, loss of which to extend the descent of 99.70 towards next targets at 94.61, low of 29th of June, and the 94.20 low of 18th of June, ahead of another very significant 94 zone, where it's 61.8% retracement and the 200 days moving average. And the gold remains steady. It's in the sideways, near-term sideways mode following a recent extension that took to 1698.90 so far. This was the high of yesterday, just a few ticks ahead of our initial target at 1700, with the positive tone still in play as the price consolidates within approximately 10 pips range. The point on the hourly chart is that studies are still weakening, yet no any signal generated for possible further easing, as 1685 range floor still stays intact and keeps the downside protected. More positive but overextended conditions are seen on the 4-hour chart. As mentioned, I think yesterday in our analysis, that 1700 zone is likely going to be quite a tough resistance, and might not be clear that the first attempt, as overbought 4-hour studies see potential for some action already signaled by stochastics, yet the price is not reacting accordingly. Below 1685 we have 1676 previous peak as good support, ahead of 60-50 zone, and where is also the trend line support, and the risk could be seen on loss of these levels, and another significant 1646 that will keep the sideline the near-term bulls in favor of stronger corrective action. On the upper side, break above 1700 would open 1716 and 1725, but also significant is that daily studies are now quite topish, and the RSI is already in the overbought territory, while other indicators are quite extended, all in extreme, all at their extreme points. That could be good signal for some stronger corrective action of the latest strong rally from 1526. This is the critical support zone that so far regained levels close to 1700. And finally, the crude oil dipped significantly off yesterday's 97.35 high, retracing so far approximately over 61.8% of the latest upleg from 93.94 low of 30th of August, and turning the near-term focus towards the downside. Quite extended conditions on hourly chart. See some potential for a corrective bounce, yet no any signal, but pressure remains on the downside as 20 days exponential moving average crossed below the 55 days one on the hourly chart, and a brief recovery attempt seen overnight was capped at 95.66 as the price revisits yesterday's low at 95 zone, seeing more risk towards the downside. Break below 95 will turn direct focus into 94.50, and then a 94 zone as our strong support. Also, the 4-hour chart studies are losing traction as the indicators are breaking below their center lines and seeing more potential towards the downside, despite the recent bounce of 93.94 was promising some stronger corrective action. Failure to regain next barrier at 97.70 is now risking a lower top at 97.35 with a dip below 94.50.40 and 94.00 required to confirm and open way for a stronger retracement of the larger up move from 86.91 to 98.27 as a recent low at 93.94 marks exactly 38.2% retracement. Break of this level would look for extension towards next static support at 93.00 and 92.60. That is 50% retracement. On the upside, immediate resistance is overnight's high at 95.66 and previous lows at 96.00, also around figure resistance. And I would say basically break above 96 and 96.20 would bring some more positive, would basically avert immediate downside risk. Otherwise, retest of 95.00 and possible break lower could be the likely scenario in the near term. That was all from us for today, Wednesday, 5th of September 2012. Thanks for being with us, and we expect to see you again tomorrow morning. We are back at the same time at 7:00 GMT or at 10 o'clock local Cyprus time. I wish you a nice day and very successful trading. Good luck.